It's a game of wait and see.
What is your assessment of the market climate, especially on the heels of the Fed's most recent interest rate hike?
There were no surprises, really. The Fed hiked rates by 75 basis points for the second consecutive month. That was largely priced in by the market, but the market did like that Jerome Powell said that he would look at the data for the future when considering leaning back and slowing down the rate of the rate hikes. So that was definitely favorable for stocks.
The U.S. has entered the second consecutive quarter of negative GDP growth, the technical definition of a recession. To be clear, a recession is not official until the National Bureau of Economic Research announces it. Weiss Ratings research analyst Sam Blumenfeld says the risk for one, though, seems to be growing.
We're definitely seeing recessionary indicators that are spooking economists.
Sam, you're a big fan of dividend stocks and say it's a great form of protection for investors right now.
In an inflationary environment, companies with lower multiples and companies with current stable cash flows tend to do better than growth stocks that have their cash flows discounted further into their future.
Dividend stocks essentially pay you to own them, giving quarterly payouts from the company's profits or reserves. Sam, who works closely with senior analyst Sean Broderick on his publications like Wealth Megatrends and Supercycle Investor, says the companies to watch:
companies that are raising their dividends over a long period of time, companies like Walmart and Procter & Gamble, others that continuously raise their dividends and are going to be around for the long haul. Within the S&P 500, dividend raisers have vastly outperformed those that have not paid a dividend and those that have kept them the same over time.
For high dividend exposure, there's the iShares Core High Dividend ETF, ticker symbol HDV. The fund trades with an average daily volume of more than 1.7 million shares. Among the top holdings, ExxonMobil, Johnson & Johnson, and pharmaceutical giant AbbVie.
Well, that ETF has vastly outperformed the S&P 500 this year to date. There's plenty of diversity within the ETF across all market sectors.
And there are individual stocks to consider amid market uncertainty.
There are companies that are tailor-made for this type of environment.
Specifically, Dollar General is considered a recession-resistant stock because as families and consumers tighten their belts in a period of a recession, then foot traffic generally increases in their retail locations. Consumers will likely flock to those types of stores, discount retailers.
So as you prepare your portfolio for the rocky months ahead, keep these kinds of investments in mind.
Research analyst Sam Blumenfeld, always a pleasure to talk to you. Thank you so much for making time today.
Thanks, Jessica.